Thank you for joining us today. So we're going to start, as usual, looking at the indices, and the first one we look at is the dollar index. And I'm going to put a clean chart for the dollar. And as you can see, the dollar has been moving high. This is the daily chart for the dollar index, which is a basket of all the dollar pairs. And we have put the high of Friday as 81.51, and we closed the week at 81.31. And this, as you can see, is quite a strong close. We are above the previous weekly high. We do not have any sell signal in the pound, and in the US dollar. And if we look at our chart, the one that has our lines, and these lines are our buying points. So you can see that we had the initial structure point, the initial breakout point, which is the 81.02. We broke above it at the beginning of last week, and then the second break was above the 81.20, and the last structure point, which would begin the breakout to the upside, is the 81.36. We did trade, as I said, and put the high of 81.55, and we turned around and we closed the week at 81.31. This is quite a strong close. This is a good close. It would indicate continuation to the upside, and we should be looking for the US dollar to continue higher. Excuse me, I'm catching a cold. And the main trend change is when the dollar gets above the 84. So right now we're beginning this move to the upside in the US dollar, and our bias for the dollar is to continue to the upside. So we should be looking, and if I put the weekly chart for you, that is the chart of the weekly without any lines. You can see that we're pushing higher, and we do have here this, which is the 81.58. This was the previous structure point, 81.58, and this is where we came to. This is actually a brilliant close. I mean, this is really a good close. Why? Because the situation would have been extremely different if we would have traded above the 81.57, and we would turn around and come below it. That would represent a sell signal. But in this case, coming all the way up just shy of testing it, that is again a sign of strength. That means that there is still some pulling power, that the prices should go above the 81.57, and as long as it goes above it, that should lead to a big move to the upside. So with that, we want to stay long the US dollar, and we are going to leave the dollar, the grading of the dollar, the same as being quite strong, because we are above the 81.02, we are above the 81.20, and we're pretty much close to the 81.36, and this here is your 81.56. So we're looking for this to be tested at a minimum, and once it breaks above it, it should go towards the 82.04. So we're going to keep the US dollar as is on our buying scale, as in this green. The second one we're going to look at, which we had from last week, what we had from last week, let me show you. We had that the yen was very weak from last week, and we were shorting the yen. And you all remember, I mean, in the room when we were trading last week together, I mean, the best trades that we had last week was in the yen pairs, going short the yen pairs. And this is the chart for the yen. As you can see, originally the trend was to the upside. This has been now a price acceptance zone, and we began here to have several structural failures to the downside. That's a failure to make a high. That is your one structural point. That's a second failure to make a high. That's another structural point, and it broke below it. That is the last structural point, and we did break below it. So we had 3 failures to make a higher high, followed by 3 structural points, and this here is the last one we had, and you can see the capitulation. So with that, we have nothing here that would indicate a buy signal, nothing that would indicate anything but continuation to the downside. This is Friday, and this is Thursday. Was a very big range day, and the following day was a small range inside day with a neutral kind of close, and that means that this is a sign of continuation to the downside. So we're still looking to be short the yen, and we're still looking to take the yen to the downside, and the yen is still, now we're beginning to have what we can call a bear market in the Japanese yen. So the yen now has turned into the downside, and we are in a bear market Japanese yen. So in setting our pairs, we're going to leave the yen as very weak, because we're looking for continuation to the downside in the yen. So we, okay, the next one we're going to look at is the British pound. And the British pound, as we all know, is quite weak. It has been in this sideways. This is the index for the pound. It's been in this sideways pattern now for the last, since 2009, getting close to 4 years now, basically going nowhere in a hurry. This is the original trend, is to the downside, so our bias into the pound is still to the downside. And by looking over here, you can begin to see a failure to make a high with a minor structural point. This is a second failure to make a high, and this is the structure point, which is the 159.12, and now we are below this. And what we had on Friday is pretty much another inside day similar to what we had in the yen. So that is a neutral day, and as long as we're below the 159.12, our bias to the pound is still to the downside. So we want to be, so the pound is weak, and we want to be selling the pound, but it is not weak as the yen. The yen is much weaker than the pound. So we're going to change this. Instead of being double negative, it's going to be 1. So the yen is very weak, so the yen is 2 minuses. The pound is slightly weaker, but if I'm going to compare those two, the pound is stronger than the yen, so I can take the pound yen if I wanted to go long. This is how we do the pairing. The next one we're going to look at is the Australian dollar. I'm going to leave the euro and the Swiss for a second. The Aussie, as you, again, this is technically one of the strongest currencies out there. It was pretty much the same as the yen, but the yen has broken and began to give us technical sell signals to the downside, breaking below the structural points and giving us sell signal to the downside. The Aussie is still in the mode of turning down. I mean, this upward trend to the upside, which began in 2009, we have been moving in this sideways pattern now from 2009, again going nowhere in a hurry. There is no reason that we have now to initiate brand new longs in the Australian dollar. They are not raising interest rate. The economic situation in the world is pretty much the same. So either we're having global recession or we're having global weakness, whatever it is, but there is nothing that would instigate additional buying in the Australian dollar. So at best, this thing is going to be neutral. So there is no upward pressure. So it's going to be neutral, or it's going to be subject to some profit taking, and this is what we're having. I mean, if you want to squint, this is a lower high and this was a structure and you got a break. So here, this is still a sell signal. So again, it's not a trend change. This thing is going to be oscillating between those highs and lows. So we are going to get one more push to the downside in the Aussie, and if it breaks below the 102.54, it should give us another push down to take us all the way down to the 10071. And all of you guys know, since we're in the room together trading every day, how magnificent the Australian has been, breaking below the structural points, above the long point and below the short point, how beautifully it has been moving. It has been one of the no-brainers, but the bias is still neutral to the downside. So for the Aussie, our bias will be minus, means negative, or again the bias is to the downside, and so Aussie is we're going to be neutral with a negative bias. Okay. The next one we're going to look at is the euro dollar, and as you all know, the euro has been linked to the Swiss franc, and they have set a relationship. The Swiss National Bank has set a relationship between the Swiss franc and the euro to be around 120 to each other, and that relationship has created that the Swiss and the euro to be moving pretty much in the same direction and pretty much one-to-one. So for the guys that are joining us for the first time, I want you to take a look, take a mental picture of this one. This is the chart for the euro dollar. If I put the chart of the Swiss franc, you can see that it is pretty much one and the same. I mean, it's you wouldn't know that I have changed the chart. If you look again, this is the Swiss franc. If I put the chart for the euro again, you can see that it's pretty much identical. There is only one variation, which is this high over here. That's the high in the euro, which I'm going to explain. But technically, it is a mirror image. Whatever you're going to do with the euro, you're going to be pretty much doing it with the Swiss franc. And with this, we do have the bias is, I do have here a structural failure to the downside. The euro now is beginning to resume its downward move, and if it does break below the 126.55, which again, if I just move this up a little bit like this, you could see that this is the 126.65. It is also the low that we had here, exactly this low. This low is the structure point, is the same, is one and the same as this structure point. So what we had now, it broke below this, the first structure point, which is the 128.33 over here, and it came down to the next structure point, which was this one, and it tested it and it bounced. So all what we have right now is a bounce above of the 126.66, and we should be looking for one more additional push to the downside. It should come down and trade or test. I wouldn't buy it unless it goes below the 126.62 and then turns back above that, or we can buy it above the 128.33. But right now this is negative, and that is pretty much a sell signal that we have in the close on Friday is a weak close, and you can see it on the weekly chart for the euro. It is a non-direction, and you're looking for a further decline to the downside. So what it did here is very normal, testing the structure and bouncing, but the bias is still to the downside, and we're looking for it to continue down. So our position for the euro is still going to be the same, quite negative. So we'll be looking at selling the euro. The Swiss now is going to be the next one we're going to talk about. This is the weekly chart for the Swiss. Let me put the daily because and you can now see the difference, slightly the difference between the Swiss and the euro. We don't have a buy signal here. This is still a sell signal. You see we closed the week at 150.70. The previous daily low is 105.71. We could not even come and close above the close of the low of Thursday. We are still, our close on Friday is still below the low of Thursday. So this is still a sell signal. We're still on a long liquidation, and we should be still looking for the Swiss to go down. But so the Swiss is going to be also negative. So we're looking to sell the Swiss. The Swiss again is stronger than the euro. I have a technical, as I showed you last week, there is a difference between the chart of the euro and the chart of the Swiss. We have a potential trend change in the euro to the downside, and I'm having long liquidation in the Swiss. They are different. They are not the same. They look pretty much the same, but they are not the same. This here is a potential trend change in the euro, because I have a failure to make a high, and that is my structure. Here is my trend change. For the Swiss, I don't have a failure to make a higher high. I did put in a higher high, so therefore the trend is intact. What I'm having here is a long liquidation. So the Swiss technically is stronger than the euro. And that's why I put it 1 minus and the euro 2 double minus. Okay, last but not least is the Canadian. And what we have over here, we do have a trend change in the Canadian. I mean, the Canadian dollar is now beginning to trend to the downside. That is your first trend change. It came down to the second structure. It came back, tested the structure, the one, the below 99, and then it pushed down. It went as low as the big granddaddy of the structure, which is the 99.45. And we had a small bounce to close at 99.76. This move that you see here happened primarily in the US dollar. Most of the action happened in the US dollar, in the dollar CAD on Friday, not in any relationship, not as much with the pound CAD or the euro CAD or the Aussie CAD. But it happened primarily, it was mostly dollar action, dollar CAD action than anything. So with this, I'll be looking to be a seller of the Canadian. I will be a seller of the Canadian. So now looking at these pairs, this is how we're should be trading. We should be looking at going long the dollar, short the yen. That's the first one. Then I can go long the dollar and short the euro. So short the euro dollar. If I'm going to go short the euro dollar, I can go also long the dollar Swiss. I can keep an eye on the pound dollar to go short the pound dollar, and I can also keep an eye on the Aussie dollar. But the hierarchy, I'll be going short the yen first, then the euro, then the Swiss, then the pound, and then the Aussie. The Aussie, as I said, is neutral to positive, so it is stronger than the yen. So I can go long the Aussie yen. I can go long or go short the euro Aussie. I can go long the Aussie Swiss. The pound and the Aussie, they are kind of equal. I mean, both of them are equal, so they're not really be a good candidate, but I might look at the Aussie CAD. And since the yen is really weak, I can look at the Swiss yen. I can go long the Swiss yen, or I can go long also the pound yen, because the pound is stronger than the yen. So the pairs I'm going to be trading, I'm going to go long the dollar across the board, and then I'm going to go long the Aussie yen. I can go short the euro Aussie. I can go long the Aussie CAD, and I can also go long the pound yen. And if you wanted, you can go short the euro pound, because the euro is weaker than the pound. So you can go short the euro pound, and you can go short the euro CAD. And this is going to be the pairings that we're going to be trading or analyzing. We're taking all the dollar pairs and we're going to pair them. We will start with the dollar yen, then the euro dollar, then the Swiss dollar, then the pound dollar, and then we're going to, since the yen is very weak, we're going to sell it against everything else. So we're going to sell it against the Aussie, we're going to sell it against the euro, we're going to sell it against the pound, and we're going to sell it against the New Zealand. We're going to sell the yen across the board. So we'll be buying the dollar across the board, and we'll be selling the yen across the board, and then we're going to do some of the other pairings at the same time. Okay, so let me save the recording, and while I'm saving it, if anybody has any questions